Hello, great to have you here. I'm Janne Muta, Chief Market Analyst for TIOmarkets. I have put this video together so that I can help you to identify the markets that have momentum. So we're going to see which markets are going up, which markets are going down, and where the key levels are in these markets. Watch this video only if you agree with this disclaimer and with the fact that we don't provide any investment advice. Okay, let's take a look at the Japanese stock index. So this is Nikkei 225 CFD, and as you can see, the market has been rallying quite a bit and then it started to move sideways. First of all, let's go and see the history a little bit. This market kind of moves in similar patterns. So you have a rally higher and then chop, chop, chop. Market moves sideways, then another rally and then more sideways ranging action. So why would I be interested in this market? First of all, we have a higher low here. This low is higher than the previous one, and then this is followed by another reactionary low that is higher than the previous. So we can draw this supporting trend line, the red line here, pointing to higher prices. And the fact that the market has rallied from there gives me sort of hope that yes, possibly we just keep on going higher. There is a bit of resistance from this sideways move here, but the higher low suggests there are people who want to be long in Japanese equities. So where might this market go if it carries higher? So first of all, if the first resistance level at about 30,250 is about 3.5% away from current levels, if we can push further, then I think we could see this developing into a bullish triangle. It's a little early to say this is a modestly bullish market, so anything can happen, but if we get a break above these highs here, then we could say that we have a proper breakout and then could use a sort of method where we take the width of the previous sideways move and project higher from the levels. So we could obviously take this or the next one. Let's see if we do this, and then I'm going to give you both percentages. So if we break out, then the first more moderate target would be about 10% away and the other one at about 12% away. So obviously there's no guarantees that the market is going to go there or that is indeed bullish next week, this time next week. But at the moment, there are bullish signs in this market, which does suggest with the bullishness in the sort of stocks markets globally, I think there is a chance that we get to see more upside in the Japanese stocks also. This market is IBEX 35. It's the Spanish equity index and it has been rallying quite strongly lately. From about here, 21st of April, it has rallied about 7%. So we are trading fairly close to the channel high. And as you can see, it's been reacting to the high a little bit. The market is still making higher lows on daily basis, so it looks like it wants to go higher. But if there's a retracement, then we want to know where the key levels are. So first of all, we have this zone here, and I'm going to show you the levels or the sort of exact values here. So the first is from, let's round this up a little bit. So from 86.89 to 87.34, and here we have several technical factors coming together. We have the 20-day moving average, 23.6 Fibonacci retracement, and this level that used to resist prices in the past. So the high of 87.39 or 87.40 roughly is a level that used to resist bulls, and then the bulls were able to push the market higher. So now this level might be interesting in the future. If it doesn't attract buyers, then the next interesting level is down here. And again, the levels, actually the values here. So let's round this down a bit. And yeah, there we go. So 84.97.5 to 85.66. That's where we have a 50 period moving average, the channel low or the rising trend line support, whichever you want to call it, and the 38.2 Fibonacci retracement level. All these come together in this zone. So that is an interesting level or a zone to follow should the price retrace there. So if we get signs of buyers stepping in inside these zones, then we like this market on the long side. So that's what I'm seeing here. Let's go and see some other markets too. USDCAD is a market that we have been bearish since the time of BOC cutting their bond buying program. They cut it by $1 billion or 25%. So that's significant. And we've been arguing that such a move by the BOC is going to cause movement in the market for longer than just a few days. And this is exactly what's happening. You might remember that we actually were studying this market here last week. So you can go and view the video if you like. But we were basically saying that it takes quite a bit of faith to believe that the market participants could turn bearish in terms of the risky markets or risky assets like oil. And indeed, now oil was trading at the time, it was trading somewhere down here, and basically we said that because of this momentum in the market, because of the bullishness from Goldman Sachs, etc., they were calling $80 oil. We believed that this market would be moving higher beyond this zone here and to the next zone. This is actually what happened. This target was met, and another target that was met is here. So basically, when the market was trading up there, and you can check this on the video, so I'm not making this up, but we said that we expect this market to move about 130 to 150 pips if this support breaks, and here we are at 150 pips lower now. So this prediction was actually correct. And now the key levels are this low here, so 23.65 or so, and then the nearest confluence zone is where we have the channel high, 20-day moving average, and 23.6 Fibonacci retracement. The channel low on the downside is obviously interesting, so that's about 70, 78 pips, 79 pips away from the current levels now. The market remains bearish, all the price action remains bearish, and what the BOC did isn't going to go away that quickly. This is one of those factors that set the long-term trends. So this market definitely stays as a bearish market in our books until we get a rally above this level. But at the moment, it doesn't look likely. As some of you know, we have been bullish on this market all the way from here, basically saying that yes, there is upside potential. Then we got very good news. Goldman Sachs agreed with us, saying that gold could go significantly higher, and they quoted a price tag of 80. That's pretty steep increase in the price of oil from about $61. So anyway, we said that it's likely that we get a move that is at least taking this market to this area where we had the channel high. But now we have seen further buying coming in, and the market has moved to the next zone, and you can check the previous videos to see that we actually gave you those zones already, so we're not making these up now. But let's go to where the market is trading at the moment, what's likely to happen now. There is some bit of a struggle with the dollar, so maybe there is some dollar strength coming into the market. Maybe the market could react lower all the way down to this channel low again. Who knows? We don't obviously know the future, but if it does, I'm seeing a couple of things coming together. On top of the channel low, we have a sort of minor support level here, but there is something else. There is a sort of major support level here too. That's a level that used to resist prices, and then we've been chopping through the zone or the level a couple of times. But now we can see how these things come together here. We have 20-day moving average, 50-day moving average, channel low. We have this historical interesting level here, and we have this support. So if the market retraces here, it will be very interesting to follow this. So let's place alerts there and be ready to see if the buyers step in to this market. Then if that's the case, then we could see let's see a move maybe back to the same levels that we are at the moment. So that would be about 3.7%. But if the big buyers just believe that this market will recover and we get rid of the COVID-19 disease little by little, then we might get more demand upgrades in the analyst expectations, and then the market might move to about, say, 6.8 to 7.8%. So this is what I'm seeing here. Hopefully this was useful to you, and I wish you safe trading. Thank you guys. I hope this was helpful, and I hope that I see you again. If you don't want to learn more, go to TIOmarkets.com/webinars, and I'm more than happy to teach you how to trade successfully and without those teething problems that so many new traders have. So go to TIOmarkets.com/webinars today.